So good morning, everyone. Good morning.
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 Thank you for joining us. So today we're going to hear from Galina, who's going to give us a little bit of a discussion about the implications of the new IRS filing date. You might all have heard that it's been moved from April 15th to May 15th, I think, 1 month later. So she's going to talk a little bit about that and the implications for individuals and businesses. But first, we'll do our usual go round. So Sonia, welcome back. Sonia.
Thank you, Alex. It's so good to be here
So
on this Wednesday morning of fine foods.
right.
I'm Sonia Sala. My jam is nonprofits. I'm all about nonprofits, helping them fundraise and making the best of every possible opportunity they can.
Thank you. Thomas Farrell, good morning.
Good morning, Alex. Thanks. It's good to be here again. I'm a business law attorney, and I have expertise in contracts and regulatory matters and employment matters sometimes too. And I miss this group when I can't make it, so I'm glad to be back.
Thank you very much. Good to see you again. Jaseni?
Good morning again, everybody. My name is Mitino. I am the president at Josie Michelle Events. What we do is that we plan events. I plan weddings, social events, and virtual events. So if you want to see what we do, make sure to come tonight to the QCP dinner so you can see what we do behind the scenes when we plan virtual events.
Okay. Mara, good morning.
That was quick. Good morning, guys. Good morning, Mara Rohanyan, Cruise Planners. Travel franchise. We represent American Express Travel. And I have to tell you, the excitement is almost palpable in the air. Cruise lines are resuming, at least in Caribbean and Bahamas, at least the 3 of them that I know of for now. Celebrity, Royal, Crystal. So anyway, travel is coming back. Greece is opening mid-May. So just talk to me because I can help you with all kinds of travel plans. Everybody here knows, on this panel knows that I really love doing river cruises. So if you know anybody who ever mentioned that in your presence, please send them my way.
Thank you. Nancy Vargas, good morning.
Morning, Alex. Good morning, everyone. Happy Wednesday to all. My name is Nancy Vargas. I'm CEO of DH2 Chauffeur Transportation. What we do is provide safe and private ground transportation services. I am so excited to share that we continue to see the uptick of travelers. Mara, I'm sure, is very happy to hear that as well. And you know, we're definitely taking passengers to the airport for family vacations. So I'm really excited to report that. And we also provide mobile detailing service, which means that we come to your home and we clean and detail your vehicle as we do our own fleet. Thank you so very much.
Thank you. Neil.
Good morning, everybody. Neil Levin, Webline Media Group. We have been designing and developing website projects for 26 years now. We offer design, online marketing, ADA accessibility audits, and if you need some help with your website, give us a yell.
Thank you. Steve Karp, good morning.
Good morning, everybody. Stephen Karp, Variable Promotions, printing and promotional products. Printing anything you could think of, business cards, stationery, envelopes, banners, posters, catalogs, sell sheets, invitations, postcards, etc. Promotional products, anything that bears your name, image consistency, image recognition, variable graphics. Stephen Karp.
Thank you.
Just one quick question. Masks too, as much as I hate asking this.
We do masks.
I just wish they went away, but since they are still here, yeah. Thank you.
The minimums were a little high on that stuff, only because they're so inexpensive.
Susan Pashkus, good morning.
Morning, everybody. Susan Pashkus, professional project manager, meeting and event planner, and teaching artist of theater arts for underserved youth. Currently seeking opportunity, looking for an opportunity to work in the nonprofit sector, specifically with organizations whose missions have a social impact focus. I'm based in South Jersey in the Philadelphia area. have some deep connections to meeting venues, meeting planners, especially in the pharma industry, and also connections to the arts here in the area. So if anyone is looking to utilize me to make connections down here, South Jersey, Philadelphia, please reach out. I'm happy to help.
Thank you, Susan. Martin Richards, good morning.
Good morning, everybody. Martin Ridgers, Farmers Insurance Group and NKR Specialty Insurance Brokerage as well. And I focus a lot on commercial risks predominantly, in assisting and working with recently some nonprofits have been contacting me, as well as some event organizations as well. So that's been some of the latest things, which is wonderful to hear that people seem to be getting more active as well and looking at events and things potentially into the summer or September and onwards. So that's good news. And anyway, Martin Ridges, MKR Specialty and Farmers, safeguard your future. Thank you.
Jerry Schwartz.
Good morning, Jerry the Geek here. For all your computer needs, I do computer repair and support for small businesses and homeowners. Is your computer running slow? You think you may have a computer virus? Looking to upgrade or looking for a new computer? Give me a call. I can help you out virtually as well. So my information will be in the chat, and I actually will be on a show tonight. So that's why I can't make it. So. The Business Power Hour with Darren and the Music Man. So,
no, please post that link if that's available.
It will, sure.
Thank you, Mr. Horowitz.
Yes. Hi. Good morning. First, shout out to Jerry. Awesome job. He helped me fix my computer. I called him on the fly. He spent about a half hour with me, logged into my computer and did what he needed to do. So it was a great experience. Thanks, Jerry. So Benjamin Horowitz, I'm the CEO of BSB Consultants. I specialize in group health insurance for businesses, whether you're small or large, 2 employees, 25, 100, 3,000. If you're not sure if you should be offering health insurance and you want to have a conversation with me, give me a call. I'd love to help you.
Thank you. Claire McCarthy, welcome back.
Hi, it's nice to be back. I'm from Paul Davis Restoration of Metro New York. We are a building restoration company that provides emergency property damage mitigation, reconstruction, as well as contents cleaning services when there's been a fire, water, winter storm, mold, or other disasters in your residential or commercial buildings.
Thank you. Mr. Diaz.
Good morning, everyone. Robert Diaz, Edward Jones. I'm a financial advisor. Also a CFP certificate, certified financial advisor. About 20 years in practice here in Plainview on Long Island. My specialty is in working with individuals, families, and business owners, helping them to plan for the future financially, for the lifestyle they desire in retirement, or for educating children or grandchildren, planning for life events that they look forward to, and unfortunately, in some cases, things they don't want to see happen. We help them avoid some pitfalls. Just a quick blurb about the anniversary. Yesterday was the anniversary, or the market low of 2020 in response to the pandemic. So we've come a long way, and it's a great time to be reviewing what's done well, what maybe has opportunity to still continue to do well, and what may be some things to jettison from a portfolio. So that's what we're all about, evaluating portfolios and help people plan for the future. Great to be here.
Thank you. I'll be in touch with you about a presentation, Robert.
Sure.
Frank from EDC. I think you're new to the group. Am I mistaken, or you are, correct?
Yes, today's my first morning.
Good morning. Give us a short introduction. Your name, your company, and what you do.
My name's Frank Braun. I'm from EDC Business Solutions, established in 1957. Family-owned business. We sell, service, and supply copiers, printers, and document management, as well as mailing equipment.
Thank you. Mr. Allegria, excuse me.
That's fine. Good morning, everyone. My name is Hugo Alegria. I work for People's United Bank. I'm a business developer. I'm not sure if you have heard of the recent changes or the recent changes. We have recently merged with M&T Bank. So we're going to be a bigger and better organization. My primary role is really to help out business clients, whether it's through financing equipment, or refinancing commercial mortgages. I can also help you with your residential mortgages. If you're buying for the first time, we have great programs for new home buyers. I'm happy to be part of the group this morning, and feel free to reach out to me if you have any financial needs.
Thank you. Tress, good morning.
Good morning, one and all. I'm Tress, one of the moms at Mom's Kitchens NYC. We are so stoked about this evening's event, and I trust whoever ordered gets to enjoy our favorite. We did coconut raisin bread, we did banana bread, we did nutty zucchini bread, and we did zucchini bread. So trusting you get one of those flavors. As I mentioned, so we do fresh baked breads, cookies, we do pop-up shops, and we also cater. Thank you, and looking forward to a wonderful evening. I might even get dressed up. Who knows? Thank you.
Thank you. I'll leave John alone. So, could somebody mute himself there? I think that's kind of who that is. There we go. Okay, so today, you folks might have heard the IRS has changed the filing date for individuals. I don't know how that affects businesses, but we have today Galina Portnoy, who's the CPA with the firm Marks Paneth, I think it's called. And she's going to give us a little bit of an overview of what this means and take your questions. So Galina, take it away. I'll highlight you.
Hi there. Can you hear me well?
You can.
Yeah? Okay, good. Hi, everyone. This is such a unpleasant topic usually, taxes, because I feel like I always ask people to pay, and this is not really a good thing, but you know, we all pay our share whether we like it or not. So as much as it's not so great topic, but it is. So a week ago, IRS announced, it was exactly a week ago on Wednesday, that it's postponing the deadline for the individual tax returns. So otherwise, the returns that are due April 15 now have to be filed by May 17 this year. This postponement applies only to individual taxpayers. So it's only individual who can postpone their federal income tax returns and income tax payments due on April 15 until May 17, 2021. Those individuals do not need to file Form 4868, which is application for automatic extension of time to file. And it's just automatic, nothing really needs to be done. You have time until May 17th, I'm sorry. The IRS says the taxpayer who does request the 4868 form still will have until October 15 to file, but you must pay by May 17. No interest or penalties or addition any other items on tax to failure to pay or file federal income tax return before May 17 will apply. So as long as the payment is postponed by May 17. This postponement, like I said, applies only for the individuals, and it does not apply for the estimated tax payments, which are otherwise due on April 15, 2021 for year 2021. This postponement also does not apply for any other types of federal tax return or any other types of federal informational tax returns. So it doesn't apply for the trust, it doesn't apply for the estates, it doesn't apply for the gift tax return, only 1040, individual tax return. So in the statement, IRS Commissioner attributed this postponement on a hardship taxpayers are experiencing due to the ongoing COVID pandemic. But IRS by itself is facing a lot of challenges and they have to cope. They didn't process a lot of 2019 tax returns yet. And they also have to cope with the tax changes made by American Rescue Plan, which was enacted on March 11th. This plan, as you know, included a lot of, a big round of economic impact payments that IRS must send now, and they're actually sending them as we speak, because some people already received those. So recently IRS reported that about 90%, about 90 million stimulus checks were already sent. American Rescue Plan also included changes retroactively affected 2020. That's why IRS kind of gave this postponement. And those changes are for unemployment compensation. So now the first 10,200 of unemployment compensation benefits are tax-free for many taxpayers. But the point is that a lot of people who did receive the 10,200 or more, they already filed their tax returns and possibly paid the taxes. So people rushed to amend the tax return, and IRS came up with a statement saying that they're advising do not file the amended tax return, because now they come up with the system where if the tax return was filed, it will be adjusted for the first 10,200 if person qualifies. The tax on that amount will be refunded. The same applies to those who had an advanced premium tax credit on their tax return. So do not rush to amend and get the money back. IRS promising that they will refund the money as when they process the tax returns, it will be refunded automatically. This marks the second year in a row that April 15 deadline has been postponed. Last year, federal tax filing and payment deadline was postponed to July 15 due to the COVID. This year, filing season started so much later, February 12th. And as of March 5th, the IRS was reported that it has received 55.7 million returns and had processed 49 million returns. So they're falling behind. And total refunds were down 32% compared to the prior season. In general, all the accountants feel that many taxpayers will not benefit from the extended deadline. The failure to include the estimated payments nullify all the benefit of the postponement. So in order to calculate the estimated taxes for 2021, we actually have to do all the work for 2020. And the reason for that is that in order to avoid the penalties on estimated taxes, you actually have two ways to do this to calculate the estimated taxes. You can either pay 90% of your present current tax year liability or rely on your prior year tax liability, which is 2020 tax liability, and pay about 100% or sometimes 110% depending on your income. More than 9.5 million individual returns in 2018 that were filed, they had estimated tax payments. So whatever IRS did with this postponement, it's really not gonna help a lot. It was a good step, and some appreciate the IRS recognition that filing deadline postponement is indeed necessary. But the announcement is so far, too good to be true. It's too selective from who receives the relief. In fact, the taxpayers who are most likely to benefit from the additional time are those who actually can meet the original deadline and possibly already filed it. This selective decision by IRS unfortunately creates more bureaucracy and confusion, and it's totally out of sync with real world stresses that we all face as taxpayers, as tax professionals, as small businesses that we all have to deal with. On top of all of this, each state has their own saying of what they allow and how they're going to go about it. So it doesn't mean that if federal government postpones it to May 17, that actually the states will follow the rule. They discuss it, and it takes a very long time for them to come up with a decision. So it's already a week since IRS announced, and for now, as of yesterday, we have only 28 states that actually extended their filing date. So I have to say that the states like New York, New Jersey, Connecticut, Pennsylvania, Maryland, I'm not going to list all the 28, but those are among those who did, as of yesterday, extend also through May 17. I mean, we expect that more states will come up with this, but it's total possibility that some will say that they are not following the deadline, May 17, the same way as they said they're not following the 10,200 for unemployment. Some of them will continue to tax it. As I mentioned before, estimated taxes did not get the extension. And if you underpay your estimated, underestimated quarterly payments, you may be subject to additional penalties. Now, what else this imposes as really a time frame for all these payments. It feels like every single month you have to make a payment. So on April 15, you actually have to make a payment for the 2021. So the first quarter of 2021 is still due. Then on May 15 or May 17, you have to make a payment for prior year, which is 2020, if you owe any balance. Then month later, you also have to make a payment again for 2021. So it's a confusion and a mix-up. We actually are, we actually at our company urging people to really not to rely on that postponement and really do everything now. We also try to say that even if you do May 17, think about April 15 first quarter payment and May 17 and June together, because it's just constant work for everyone, and you don't want to really deal as a taxpayer or a tax professional with this on a monthly basis. So this is really the amplification, if you want to call it. This is not a good thing, what was done on one way, but what really caused it. And like I said, a lot of cause is because IRS cannot deal with all this timely, but it also goes back to this American Rescue Plan of 2021 with all these changes. So I will touch a little bit on that. So like you, I'm sure, aware, on March 11th, the President Biden signed this law of American Rescue Plan, which called ARPA. It's a massive plan, 1.9 trillion legislative package. And it addresses various topics and subjects, and those are the stimulus payments, aid to school, additional funding for emergency injury disaster loan program, paychecks protection, vaccination, nutrition, housing, health insurance. So I will touch more like on individuals. You probably aware about the individual rebate credit. So the ARPA provides the refundable credits for eligible individuals for up to $1,400 for single filers and $2,800 for joint filers, plus the $1,400 for child and non-child dependent. Rebates are subject to phase out threshold, and the threshold for the individuals begins at $75,000 adjusted gross income and $112,500 for heads of household and $150,000 for joint filers. Rebates totally are gone if for individual reaches $80,000, and of the AGI, 120 for head of household and 160 for joint filers. All eligible individuals must have valid social security number and not to be a non-resident alien. And of course, it doesn't apply to the estate or trust, or an individual who is claimed as a dependent on another individual tax return. So these rebates are not subject to reduction to offset any other federal tax liability, which usually credits come like if you have an outstanding liability and you are entitled to have a credit, government would take the money. So those are not going to be subject to that. So if anyone has an outstanding liability, they will still get the full credit if all other applies. The unemployment assistance, weekly supplemental unemployment benefits of $300 are generally extended through September 6th of 2021. For any taxable year in 2020, the first $10,200 of unemployment compensation, and if it's a joint filers and each of the spouses receive the unemployment, both of them will get the $10,200 as long as their adjusted gross income is less than $150,000. So this may cause a delay because some of the software are not really adjusted to this to 10,200. But like I said before, IRS says that if you do file with the 10,200 taxable, or if the money were withheld from these checks or payments, they will refund them automatically as they process the tax returns. So if you want to file, you can file, or if you'd like, you can wait a little bit longer until the software adjusted if you don't use the professionals and you file it yourself. Dependent care tax credit for 2021, this credit is made refundable, and it's potentially worth $4,000 for one qualified individual and $8,000 for two. It's subject to reduction based on adjusted gross income, and the maximum credit is available to all households with adjusted gross income up to $125,000. This ARPA also increases the exclusion from income for employer provided dependent care assistance. It used to be that if employer provides $5,000 assistance, it would be not taxable. Now it increases to $10,500. If it's a married filed separate, it's 50% of that. So from $2,500, it increased to $5,250 for 2021. Child tax credit for 21 is fully refundable in if it exceeds the taxes owed. So it's one of these credits also that if you didn't have enough tax liability, you wouldn't get the full credit, which is now it's fully deductible. It's increased to $3,600 for children under 6 years old, and it used to be $3,000. It's also subject to phase out like a lot of other credits, and full credit available to married couples filing joint return with adjusted gross income of $150,000. It's a head of household, it's $112,500 limitation, and if it's a single filer, it's a $75,000 limitation. Also, the same ARPA provides for advance payment of approximately 50% of the credit to be paid to the taxpayer in equal installments during 2021, with the remainder claimed on the 21 tax return. So if you didn't get the full credit, you'll get it as a credit on your 2021 tax return. There are a lot of changes also pertaining to earned income tax credit. and its expense eligibility and amount of the earned income tax credit with no qualified children for 2021. The maximum age to claim the earned income credit is reduced from 25 to 19. So it used to be that only if you are don't have a qualified child as a single taxpayer, only if you're 25 years old you can claim it. Now it's actually more accessible because it starts at 19. Certain full-time students and the upper age limit for the childless earned income credit is eliminated. So the ARPA also allows married but separate filing separate individual tax return treated as not married for purpose of the earned income credit, as if they didn't file, if they don't file jointly, they can still get that credit. There is a huge, it's a big thing for the student loan forgiveness. Gross income tax does not include any amount which would be included in gross income for discharge of indebtedness. I mean, I can go on with others, but I also think that I don't want to overburden you with all these terminologies, and I would rather answer questions if you guys have questions. If I don't have the answer, I will come back to you with the answer, but I'll be more than happy to explain maybe more particular things or give you more information if you'd like to have something in particular.
Thank you, Galina. Are there any questions? Do people have questions? Go ahead, Sonia.
Thank you, Galina. I kind of got lost with all the terminology, but I have to be honest. It's not where my mindset is. But did you say anything about charitable donations, how that's changed? So if
the charitable donations did not really change a lot. They changed for 2020. What happened is that now, well, if you remember a couple years ago, the charitable donations, you used to get the credit, and it still is, only if you itemize deductions.
Right.
If you use itemized deductions.
Right.
We used to have itemized deductions and we used to have exemptions. So we don't have exemptions anymore. And what happens with no exemptions, now you have, it doesn't really matter now if you have 2-3 kids. It's a standard deduction, which is now for joint filers, $24,400 for this year, for 2020. And if you're not itemizing, then you don't get a credit for any charitable deductions that you make. So what is changed for 2020, even if you don't itemize, you get a $300 deduction for charitable donation.
So 300 is the minimum.
If you don't itemize.
Right, so 300, but if you're over 300, it's worth itemizing, is what you're saying.
No, so in order to figure out if it's worth itemizing, you actually have to take a look at the full itemized deduction list. So what is itemized deduction? It's medical expenses, it's your taxes, it's your mortgage interest, and your charitable contributions. Those are the itemized deductions. So if you evaluate all of these deductions and you come that your total comes to be more than standard deduction, which is given by the government, then you itemize. And if you made more than $300, you will be able to utilize the full amount. Giving you an example. So somebody made, so the taxes are kept at $10,000 and the taxes deductible kept at $10,000. It includes your state income taxes, your city income taxes, and your real estate taxes. So we are in a tri-state area, pay much more in general than that. Only real estate taxes often are close to that or more. So you technically right away keep it as a kept $10,000. So out of 24,400, less 10,000. So what's left in that pot now is 14,400. I'm talking about joint tax return, just for example. So now we go to the mortgage interest. If you have a mortgage interest and your mortgage interest is very close to 14,400, then you probably will itemize. Do you understand what I'm saying? More or less. You want me to, so, and then if you are close to that, then you totally probably, if you do the charitable contributions and they are over 300, then you absolutely will be itemizing. So you have, the first thing you have to look, do you have the mortgage interest? If you don't have, and how much is it? So if it's close to 14,400, or what is the difference between 14,400 and what's your mortgage interest? What is that difference? How big is the difference? If you're close to that, you probably will itemize. If you are not close to that and your mortgage interest is only $3,000, then your gap between the standard and itemized is very big. Did you really make very close to $5,000, $10,000 in charitable contributions? So this is the thing. So if you don't itemize and you actually made $3,000 in charities, you will be able to deduct only $300.
Thank you. Does anyone else have questions? Robert, go ahead.
Don't be shy.
Go
I
ahead.
don't know all the answers, but I will try.
Right. But listen, not to air the dirty laundry, but say I lost some money, not a big amount, not a huge amount, $10,000 because of a bad investment my financial advisor made. It was a real estate, whatever, REIT, whatever they call it. So this company, gave us back whatever the cost was in stocks. It was an ugly story. So that money that I lost, is that considered a loss or?
Yeah. So what form? Was it like a broker? Did you do like a brokerage? How was it invested? I mean, in any case, it's a loss, but how?
It's a loss. Well, it was invested in REIT.
Right.
So
yes, of course. So the difference between your original investment and whatever so let's say you put $10,000, you recovered only 500, whatever that is. The $9,500 would be your capital loss.
Oh, okay.
It is, of course, it's your investment loss. It's a capital loss.
Mm-hmm.
And depending on how long you had that investment, whether you had it for a year or less. So if you had it less than a year, that's a short-term loss. If you had it
longer,
then it's a long-term loss. Okay. What happened with this, if you had any other investment gains, it will offset. Didn't have any investment gains this year. Every year you can claim $3,000 loss.
Oh, wow. Okay.
So if you have 9,500 and assuming you don't have any other gains, then this year you will claim $3,000 and it will be carried forward next year, another $3,000, and next year another $3,000, and it will reduce your overall income.
Right.
So if you made whatever you made, I don't know, you made $30,000 in something different. I'm not talking investment income. You made as you made your business income, your interest, your wages, whatever it is. So that $3,000 will reduce your overall income.
Very nice. Thank you. Thank you so much. I'm glad I asked.
Robert, Robert Diaz, I wanted to ask him to chime in on the subject. as it relates, I mean, I don't know if there's anything that you can add to what Galina said, but, you know, is there any implication for individual investors as far as you know?
So I think it's very, very informative what Galina says. Our two professions do kind of Venn diagram together, intersect at points, as Mara was just mentioning as an example. I would say look for opportunities consulting with your tax professional to determine the appropriateness and eligibility for certain programs, especially if you're saving for retirement, such as traditional IRAs or Roth IRAs. I think everyone on the Zoom here is a business person or a business owner. So there may be some special opportunities for business owners in terms of leveraging the tax code through qualified retirement plans. Those are things to consider and look at, and definitely consult with your financial advisor and your tax professional on that.
Thank you.
Mm-hmm.
Alex,
I just want to say something.
Thomas, Mr. Farrell, go ahead. Go ahead. And then
Mara,
you
I'll wait till
Mara,
Galina is finished.
Okay, go ahead.
Mara, I just wanted to say that what I mentioned to you is as long as it's not in your retirement plan, it was just an individual. Because if it's a retirement plan, you actually don't get any losses. Because you don't recognize any income, there is nothing to offset.
Okay, no, it was not. It was a separate thing. Yeah.
Okay.
Thank you so much. Thank you.
Thomas?
Galina, in New York State, there were extended unemployment benefits and there was paid family leave. And now there's this new law in New York State for paid sick time, et cetera, et cetera. Is there any way for business owners to get back some of that costs for like extended unemployment benefits on their tax returns?
For an extended unemployment on the business tax return?
Yes.
Well, what do you mean by that? You mean like if you are a business owner and one of your employees received an unemployment benefits? What do you mean by that? Well, you mean like you are a business owner and you want to qualify for unemployment?
No, the first one, where you wind up paying more towards unemployment. No, nothing to get back.
Absolutely not, and be prepared to pay even more.
Oh, good.
Because what happens is, you know, you pay the unemployment insurance every single year. And the more unemployment benefits claims are there, the more that pot needs to be covered. So what happened, it was years ago, I think, I don't remember exactly, I wanna say it was after the crash. So there was a lot of unemployment benefits. So what we saw is the federal government, because all the unemployment benefits are actually paid from the state resources, not from the government, federal government resources. But at that point, state government didn't have enough funds, and they, federal government extended their help, and some of the stuff was paid from the federal government. So what ended up happening is that it was recapped afterwards, and the business owners who pay this unemployment insurance had to cover it. And it's literally on the unemployment insurance, when you file the payroll taxes, you actually have that remuneration factor, which includes repayment to the federal government. So I am pretty sure we'll see this again. So I am pretty sure it's going to be even more. And no, you can't recover it except that you claim it as your business deduction, like for any other insurance you pay.
But the disaster help is different, right? I believe they shouldn't tax it. The disaster portion of it.
Yeah, that's different, but we're not talking, the question was a different thing.
Right.
The question was that as a business owner, you have employees, and some of them are no longer employees because you're minimized, you didn't have that many work.
You laid them off, yeah.
And those people applied for unemployment insurance and they're collecting it. So as the result, whatever you pay to the unemployment insurance, because you pay every single year unemployment insurance with your payroll taxes. That's
Oh,
all.
as a business owner. Oh, okay.
Exactly.
Mhm.
So the question was, because now this factor, that percent that you pay, because it's a percent from your payroll, it's a whole, we don't do this. It comes from the insurance state fund. They do the audit of your payroll. They see how many people are there, how often unemployment claims are filed, what is the part you contributed into the unemployment insurance, and how much really was paid out. And if it's not enough, somehow it has to be recovered. So what they do, they adjust that unemployment percent, unemployment insurance.
I understand. I understand.
You
So
pay
then,
it.
yeah.
Yes. So the question was whether, because as a business owner, you now will pay more and you recover. So no, you won't recover it. I don't see it. The only way to do it is like any other expense, that's going to be expense on the business owner, and you will deduct that expense. But that's how like every other expense is deducted.
So then my question was in a completely independent question. So remember when the government was helping with this disaster relief was $600, right? I was getting this strange amount, $525. So it's not 10% less. Like, first of all, they were not even supposed to deduct anything from that, right? They were.
Are you sure they didn't deduct your taxes?
Well, that's what they did, but they were not supposed to, right?
No. Okay. So, first of all, when you filed for unemployment, there are boxes to check whether you want the taxes to be taken out or not.
Right. But what I'm saying is this was not I was getting a very small unemployment portion because
that is the same thing, and it would be otherwise taxable the same way. So this was as like what I just mentioned before. Now we'll have 300. So originally it was 600. Then it was reduced to 400.
Right.
Whoever collects will continue to get 300. That's in addition to what would be otherwise without this provision. So whatever was calculated. So the now unemployment consists from two parts. The first part is calculated based on earnings.
Income, yeah. Mm-hmm.
The second part is just given.
Right. That given part shouldn't have been taxed, right?
No. So it's not taxed now with the total, including 10,200. Otherwise, it's taxed because that's income. So if you collected $20,000, including that 500, 600, whatever was given to you, altogether you collected 20, and you're under total of the limit for the joint filers 150,000. So then all your income, including investment income, including everything, then you will exclude 10,200, and that part will not be taxable.
Alina, I want to give Martin had a question. Go ahead. Sorry, Mara, I just wanted to.
No, it's okay. But they were taxing they were taxing it. They shouldn't have.
Go ahead, Martin.
All right. Hi. Yes. A couple of things that I've run into on the insurance side, and going back to the increase in unemployment, I have been asked by a number of clients why that they're receiving it. Now, not that I'm any expert on the unemployment side, but understand that insurance and social programs are about that far away at times, and we still call it unemployment insurance. And I remember when I first came into insurance, people were buying it as a product. So please understand that pretty much all businesses are going to be hit with an increase in unemployment, and be ready for that. Because it's happening to a number of my clients. I still have employees and everything else. So I just wanted to affirm that. The other thing is that I have found with some businesses as well I work with, is they take themselves as owners off the payroll, and they then become eligible for unemployment and can collect some of the unemployment as well. So I know a number of businesses, the owners have taken themselves off the payroll, and change things. Now, you can let me know if there's issues with that, but I have seen that happen with some of the businesses.
I'm sure it is an issue. How you have a business as a business owner and take yourself out of the payroll. However, I have to say, if you are self-employed, and I have individuals like that, that actually collected, that actually were not profitable as from the beginning, when not making any money, and also have other income and a large amount of investment income or whatever the other sources are, they still collect unemployment. So that is, but I don't see how that's possible to run the business and kind of take yourself out of payroll, even if you don't collect any. You know, how many times you have the individual owner who actually don't get any money as a payroll? You know, you as a business owner, if you don't have money to pay yourself, you don't pay yourself. But I don't, you know, how you can really collect out of the employee. I do not see that.
Okay. Galina, thank you. That was a very thorough presentation. I know why you're a CPA and I'm not, but, and thank you for everybody's questions. Neil, did you raise your hand, Neil? Did you have a question? I'm sorry.
No.
Okay. But I really appreciate your taking the time. It's very detailed and very thorough. And there's a recording of this that's going to be available. So thank you all. Thank you for joining us. And as Wendy has said, tonight's the night. There's a link that she put up there for you to be our guest if you want to watch the show. I guess it's not too late to order. No, maybe it is too late. I don't know. But it's too late to order the food. Okay. So you have to make your own dinner.
Yeah, it's late for food.
Make your own dinner. But anyway, please tune in to watch the show. It starts at 6:30. And we look forward to seeing you all again next week. Thank you all. Thank you for joining us.
Thank you. And if anyone has any questions,
thank you.
Just send me an email. I'll be more than happy to answer.
Thank you very much.
Thank you.
Thank
you.
you.
Great presentation.
All right. Bye.
See you tonight, everybody.
Thank you.
Bye.
Bye.
Bye, guys.